And it's Business Morning live on Channels Television. I'm Ladi Williams. Great to have you join us. Let's take a look at some news in the oil market now. We see oil prices fell today for a third day on growing expectations that supply growth will outpace demand growth next year. Even though the Omicron coronavirus variant is not seen curbing mobility as sharply as earlier COVID variants. U.S. West Texas intermediate crude futures fell 52 cents to $70.21 a barrel after losing 56 cents in the previous session. Brent crude futures fell 43 cents to $73.27 a barrel after losing 69 cents on Tuesday. The International Energy Agency on Tuesday said a surge in COVID-19 cases with the emergence of the Omicron variant will dent global demand for oil, at the same time that crude output is set to increase, especially in the United States, with supply set to exceed demand through at least the end of next year. And back home, the federal government, in partnership with the Imo State government, has commissioned a multi-million-naira state-of-the-art shared facility fashion center for the production of garment and clothing items in Imo State and its environs under the National Micro, Small, and Medium Enterprises Clinic. During the commissioning of the facility, the Vice President, Professor Yemi Oshibajo, says the facility is a one-stop shop for garment production and clothing items, which has about 200 world-class manual and automated fashion equipment. Do take a listen.
The Vice President, Professor Yemi Oshibajo, arrives in Owerri, the Imo State capital, to commission the Imo State Shared Facility Fashion Cluster located on Olu Road as part of the programs for the 29th edition of the National Micro, Small and Medium Enterprises Clinic. With the commissioning out of the way, the Vice President and the Governor proceed to Ahiajoku Convention Center, where they both inspect the exhibition of products by the MSMEs in the state. The Minister of State for Industry, Trade and Investment, Ambassador Mariam Katagum, sets the tone for the event.
The MSME clinics have since inception in 2017 served as an auspicious forum for increasing government's relationship with key stakeholders in the MSME sector.
For the Vice President, the idea of the MSME clinic is to improve the quality of locally made goods, create jobs, increase access to modern machines, and increase revenue.
The MSME clinic is an opportunity for small businesses to meet with regulatory agencies such as NAFDAC, the Corporate Affairs Commission, the SON, SMEDAN, Bank of Industry, etc., so that they can get to know what the problems of small businesses in this state are, and the small businesses themselves can benefit from the advice and, in some cases, the help of some of these regulatory agencies.
On his part, the host governor, Hope Uzodinma, promises that the state government will continue to provide an enabling environment for businesses to thrive.
Already, some private industry giants are here with us doing business, both in the refinery, manufacturing, brewery, and other areas of endeavor. We expect more people to come because Imo State is actually the destination point for investment.
This shared facility fashion center is the fourth in the series under the National MSMEs Clinic initiative.
All right, now to our first conversation. There's an interesting business model in fintech space called Buy Now, Pay Later, or BMPL, a type of short-term financing that allows consumers to make purchases and pay for them at a future date, often interest-free. To get more insights on this and more, join us now is John Ego, Senior Vice President, East Africa at AutoCheck. Great to have you on the program. Good morning.
Hi, good morning, Ladi. It's a pleasure to be here.
Great to have you. Well, it's quite an interesting business model. Help us understand, what BMPL is and how it actually works.
So I think for us in this sector, it's a variant of credit, right? So BMPL is really a variant of credit. So it's how can we power economic transactions across Africa by helping people buy goods and services and then pay for it later. So technically, that's what BPL is. Is a variant of credit.
Right, but do you think, this is a trend that, Africans should adopt, at this time?
So, Ladi, I think it's important to mention that there is no great economy that is built that was not built with credit, right? So if we narrow down the conversation to Africa, it is important that we have to adopt this trend where credit really powers our economy, right? Today, if I take, for instance, my sector, the automotive ecosystem, right? It's a 45, 60 billion US dollar market. And what you see in that space is that we are heavily cash driven, right? Because the credit penetration across Africa is quite slow or is very nascent. Now, if we adopt this culture of buy now, pay later, you can imagine what happens exponentially to the economic viability of the continent. It just expands our potential. So I think it's a trend that Africans we need to adopt.
But does it cut across, major sectors? Now, you talked about auto industry. Does it work in that, like almost every sector?
So credit, right, works in every sector. So if we take the automotive and speaking more around what AutoCheck does, our focus is more around how can we improve the quality of the African life by solving the transportation problem. Now we know that cars are quite big ticket. They are heavy ticket transactions. So it's almost an aspirational purchase for an African. Introducing credit or the billing structure, it helps quite a lot of people get into the pool of car owners, right? Overall improves quality of life, the safety as we're speaking about the COVID pandemic across the continent. A lot of benefits that credit avails to whatever sector it's applied to, right? Like I have said, in the automotive ecosystem, people today, MSMEs, individuals, salary earners are able to access vehicles and they can pay gradually.
But what are the risks here for consumers and merchants alike? There are concerns it could be abused. With consumers taking on more debt than they can actually handle.
So for every time we have this opportunity to speak on the credit or the buy now pay later thing, I think it's always important to educate our populace, right? One thing that is lacking is the knowledge around credit or how it works. For an individual having the notion that they're going to be overexposed to debt, it's more around what are the conceptions that they have. In our continent, it's almost a taboo for people to get access to credit. And that is a notion that we need to change, right? Because as a consumer, we be financially prudent, right? Not leveraged and manage. Then we can really benefit from the immense value that credit brings to any sector. That is also important is like I said, is customer education. We need to understand that taking debt to improve your productivity is not necessarily a bad thing. Right? It is more around improving the economic opportunity that we have, sector, or improving the quality of life. The bad thing. We need to be properly educated if we can.
Hello. I don't know if you're still there. Can you hear me?
Yeah, Ladi, I can hear you. Sorry.
Okay, we had a little, yes, yeah. But, talking about this model now, how do people actually, come across it? Do you just request for it? Maybe when you're trying to, purchase something, maybe at a supermarket or maybe an auto center. Do you actually request for it, or it's just, how do you get it?
President of credit, so automotive and all that. It's readily available at sales terminals, right? So if I came to my field or my sector, a firm like AutoCheck to do is visit the website autocheck.com, find the vehicle that you're interested for it's quite seamless. Current cash flow and some additional documentation, and then the credit is available to you. Also some similar players across some like Zero, Pay Card. There are quite a lot of those services available. What you need to do is
all right, John.
And it's quite easy to get in.
All right, John, but what would you say, are the basic requirements to actually, access this buy now, pay later model? What do you need to actually, access this facility?
In line with education, it's very mandatory regulatory that the government in some of the markets, for instance, in Nigeria, you need to have a valid identity card. You need to have your BVN. You need to have some sort of your bank statement showing your cash flow. And then you need to, if you're an MSME, you need to have your business registered with the Corporate Affairs Commission. I think these are the very basic mandatory documentations that you need. Across multiple markets in Africa, it also depends on the regulatory requirements of that country or states.
All right, so let's look at statistics now. What's adoption rate like in Nigeria?
So across Africa, I think Nigeria is quite nascent in credit. We have subpar 5% credit penetration in Nigeria. And if we look deeper at statistics from FIS, we see that 24% of transaction volume came from credit-powered services. So, and looking ahead, I think the projection is that this percentage grows aggressively over the coming years, maybe upwards of 54% of volume of transaction powered to credit. Now, if we take a look at around Africa, East Africa, you have penetration as upwards of 27%. North Africa is upwards 35%. But majorly West Africa, we seem to be quite early to credit adoption. And it's something that I believe through education and platform like what Channels has just availed us to speak about today, we can further improve that statistics and overall improve the quality of life for Nigerians and Africans at large.
All right, so, these are quite, interesting times. We've seen, the impact of COVID-19, have the Omicron variant. We also have, inflation, rising in major economies of the world. How's this impacting this model?
So clearly, I think what we have seen is that it's improving the adoption, right? Because then we are realizing that cash is king, but credit is actually the new king in town. What we've seen across the market is there's a lot more adoption of buy now, pay later options or credit options in the market. However, this is also a call out to quite a lot of the financing entities across the market, and also to the government in extension to see how we can further support this through enabling policies and enabling support for the lenders and also for the individuals who are willing to take on credit as the world evolves. But overall, COVID has really upped the ante for credit adoption across Africa.
Yeah, so if you don't have all the money at the moment, you can always opt for the buy now, pay later. But do you think it's becoming, a lifestyle, or do you see it becoming a lifestyle at some point? Because I'm sure, I've heard some people actually still frown upon this model.
So I think it shouldn't be called a lifestyle. I think it's a way of living, right? Because like I said earlier in the conversation, every great economy was built on the rails of credit. So it's our knowledge and our understanding of credit that is making us build some of the conceptions we have, right? It is quite important to explain that taking on credit is not a bad thing. So I see it as it should become a way of living for us, where we can improve our productivity by getting access to the credit that we really need to improve improve our productivity. Think about the guy who is completing the last mile delivery, and he needs a truck or a van to complete that delivery, right? In the long run, we see that there's an increase in economic value, right? If he gets a car that can enable him complete that delivery. do we tell him not to get credit, right? Because we think it's a bad thing. So overall, I think it should become a way of us living, improving quality of life by really embracing wholeheartedly credit.
All right, but let's look at BNPL model versus credit cards. Now we see credit cards didn't really take roots in countries across some countries across Africa. Why do you think so, and how do you see BNPL playing out?
So looking at the full context of things, I think it's also important to mention that at the time credit cards got into the continent, maybe the market wasn't ready for it. Maybe there was also not a lot of education for us. The world hadn't been hit by COVID. Right now, there's a lot more information. There's a lot more education. So I think that BMPL will have better chance of survival than a credit card comparison, right? So I just think the difference between both entities is the amount of information, amount of knowledge that existed, right? And that's my honest opinion. Someone else might differ, but I think with the improved quality of knowledge out there, we stand a better chance of having the BMPL model evolve better than how the credit card survived across the continent.
But is the BMPL model really interest free, or is the interest maybe added into the price of whatever you're buying?
So to be honest, I don't think it's fully interest free because there's always a cost of capital. However, it is quite negligible that if you look at the bigger picture, it's almost nothing. Because think about the opportunity cost of investing all the capital you have in buying that asset now, compared to where you can spread your capital and get involved in more projects, right? And being able to handle all those projects concurrently, right? So it's more around the cost of capital and then the opportunity cost for the person or the individual who's getting involved. I think, yeah, that it's in the long run, it pays better to pay in bits than having to commit all capital to one project at a time.
All right, let's look at credit scoring now. How does BMPL impact an individual's credit scoring?
Yeah, Ladi, thanks for that question. I think also in line with how we're educating the populace, right? Credit scoring, it's more around how do you behave? What has been your historical behavior when it comes to financial or credits? How have you behaved in the past, right? Now, with the adoption of the BMPL model, what we've seen is that the credit bureaus, the credit registries are getting more data about consumers, right? Because a lot more people are taking on loan. So what it does is that overall, it makes us a more visible and very transparent continent, right? Because then people have more data on each other. And that is only when more credit can flow in. Because if I can tell, Ladi, you have a very good credit performance on your previous loan from different lender, it builds that level of confidence to give you more capital for your next project. BMPL helps our credit positioning as a people, as a continent, and it overall attracts more capital infusion into the economy, which makes our lives better.
All right, but if I do well, with my BMPL payments, does it give me more scores on my credit scoring?
Clearly, the better you perform, the better your credit scoring records are, right? Because every time you take credit, you are logged with the credit bureau across the market, depending on where you're taking. So what it does for you is it improves your chances of getting future credits, and I think overall that's a good thing.
All right, we're going into 2022 now. How do you see potential for this model across Africa?
So I see more adoption. I see more business opportunities. I see more economic growth, and overall, I see more improved productivity across the continent. I think the focus for all of us, as we're getting out of the COVID saga, is to see how do we power back our economy. So I look forward to 2022, and I think that with players in the market like AutoCheck and some other players who are really focused on improving the African life quality through availing credit, right? we would just see more uptake, and we would see more upward movement across most of the indices.
All right. Well, I'm optimistic too about 2022, John. Thank you so much, John Ego, Senior Vice President, Check East Africa. Thank you for coming on Business Morning.
Thank you, Lady. Have a wonderful day.
You too. All right. After the break now, AFEX Commodities Market Update is next. In a moment, do stay with us. This is Business Morning. Welcome back now for AFEX Commodities update. We see the value and volume and deals of the AFEX Commodities in the week ended December 13th were in the green. Let's bring in Femi Kende now, structuring and origination analyst at AFEX, to tell us more. Great to have you on the program. Good morning.
Good morning. Great to be here.
Great to have you. So given the current performance of stables on the exchange, are these commodities expected to follow their current upward trend? But before that, let's have the performance for the week.
Right, great. So I'll be presenting the AFEX Market Commodities update spanning the period of the 7th of December to the 13th of December 2021. For the reporting week, we actually saw a significant surge in the level of activities on the exchange in terms of the value traded, the volume traded, and the number of deals executed. For the value traded, we actually saw the execution of 597 million contracts, Naira contracts executed on the exchange. This represented a 97% increase week on week. For the volume traded, we saw the execution of 2.27 million contracts executed on the exchange, representing a 116% increase week on week. And also the number of deals increasing by 127% week on week. For the financial benchmarks on the exchange, we actually saw the ACI, that is the AFEX Commodity Index, and the AFEX Export Index following opposite direction for the reporting week. For the AFEX Commodity Index, we saw a marginal increase of 0.52 to close the week at 439 basis points. However, for the AFEX Export Index, we actually saw a marginal decline of 0.98 to close the week at 192 basis points. For volume traded across all commodities, maize continued to account for a significant proportion of the trades for the week, as 2 million contracts of maize were executed this week. However, soybean, paddy rice, cocoa, and cashew were also traded for the reporting week. In terms of commodities prices, maize was actually the top gainer for the week, closing at a 7.01% increase to close the week at 197 Naira per contract. However, cocoa increased marginally by 0.01 to close the week at 1,220 Naira per contract. However, paddy rice and cashew followed an opposite trend, as paddy rice actually declined by 6.81% week on week to close the week at 205 Naira per contract, while cashew closed the week at 450 Naira per contract, representing a 6.25% decline week on week. For more information about our report, you could actually check our website, that is www.afexnigeria.com, or you could follow us at our social media handle at afexnigeria.com.
All right. So, looking at the performance of stables on the exchange, are these commodities expected to follow, this current upward trajectory? Because I heard some analysts said next year, we might see commodities prices nosediving.
Okay, interesting. So if you look at the fundamentals backing staples in the country, right, and if you look at, if you correlate this to the current period that we're in currently, you understand that we expect a higher consumption of these commodities in the country. as at this period because of the festive periods. Also, by base nature, or looking at the base nature of commodities in Nigeria, we know that demand consistently outweighs supply by a significant proportion, right? So since it is less likely for the regulatory authority to open the access of FX for people to actually import these commodities, it means that domestic consumption has to be supplied by domestic, has to be serviced by domestic supply. With this in mind, we expect that these staples will actually continue a bullish trend into the next year.
All right, then how well can these staples actually hedge against the erosion of capital, compared to other asset classes?
Right. So if you look at the return that the ACI, which is the AFEX Commodities Index, actually gave within the commodities period this year, you actually observe that the index actually closed the year at 42.1% increase season to date. If you now also cross-reference this to the performance of the all-share index, you actually see that the ACI consistently over the last 4 years has returned an average of 33%, whereas the all-share index has returned an average of 9.34% in the same period. So with this in mind, we know that the commodities market has consistently offered superior returns, and also looking cross-references this to inflation month on month, we see that the ACI has continued to beat inflation by about 9.7%. So with this in mind, we know that investing in or having exposure into the commodities market actually helps prevent the erosion of your capital and also gives superior returns at the same time.
All right, Femi Kehinde, structuring and origination analyst at AFEX. Thank you so much.
Thank you.
All right, still on AFEX now, our next conversation. Well, before the COVID-19 pandemic, the world was already not on track to meet the commitments to end world hunger and malnutrition in all of its forms by 2030. Now the pandemic has made this significantly more challenging. Also, conflict, climate variability and extremes, and economic slowdowns and downturns are the major drivers slowing down the progress, particularly where inequality is high. So if the world is at a critical juncture now, where do we stand now? What can be done to help build forward better and put us on track to achieving zero hunger? Well, let's talk to Michael Martin, Portfolio Manager at AFEX. Great to have you, Michael. Good morning.
Hi, Ladi. Good morning. It is always a pleasure to be here.
Great to see you again. So according to a UN report, a high cost of nutritious foods mean billions of people cannot actually eat healthy or nutritiously. What are the direct means to actually address this?
Ladi, thank you very much for that question. I think when we talk about the cost of food or nutritious food, as the case may be, there are a couple of factors that we can touch upon. I think the most important one would be that we necessarily need to increase, the volume of food that is available in the country, that is the quantity of food that we produce in the country. I think it is the case that right now we've spoken at different times how, smallholder farmers currently account for more than 90%, of the agricultural production within the country. I think it is the case that needs to change, significantly if we are serious about increasing the volume of production within the country. I think that's another issue that also needs addressing with regards to the quantity of production is also the seasonality issue. And it is the case that because food or commodities rather, or food in general, are only available at certain times in the year, and there's usually a higher demand for those commodities at that same time, you tend to have those costs rising significantly over an 8 to a 9 month period. I think it is the case that we need to switch away from just seasonal cultivation to all year round cultivation so that we can make sure that we have more than enough volume available for people to consume all year round. I think another issue that also bears mentioning is the quality of food that is being produced within the country. In addition to having better yield per hectare, I think it's also important for us to also have a higher nutritional element per hectare. And how that will be done is by us investing a significant amount of money and capital in research so that we can essentially get better seedlings for smallholder farmers or maybe even commercial farmers to cultivate. Other issues are largely systemic, right? And some of them would have to do with the cost of inputs, which feed into the cost of cultivation for smallholder farmers, which is basically to say, can we provide more inputs to a larger range of smallholder farmers, or can we also subsidize the price of those inputs so that it's easier for them to buy? Other issues would have to, range from storage issues, which basically stipulate that we don't currently have enough storage capacity to cover for the volume of production within the country, which then, of course, means that a lot of those, commodities need to be sold, tend to be sold rather within a very short period of time. Other issue would also be logistics, which basically feed into the price of moving goods, commodities, and nutritious foods in this case, from one place to another, which has largely been some of the issues, that the industry has faced over time.
Right. You did mention, cost escalating factors and, storage. But how can the government and, private sector, come together and make this better?
Thank you very much, Laddie. I think when it comes to addressing the cost of food, people very often lay claim to the fact that what is largely responsible are the factors of production, but I don't think they contribute in the way and in the way and manner that we expect. So let's think about it for a minute, right? If you think about land, land doesn't necessarily contribute to higher costs in the sense that there's still a significant portion of arable land uncultivated within the country and also even the continent by extension. So it's not the case that there isn't land available for cultivation. What might be the case is that we need to switch and be more efficient either with the land that is currently being cultivated or maybe switch into better commercial farming, which tends to have a better yield, in terms of production numbers. In terms of labor, I think we can broadly assert that the cost of labor within the country is cheap. What might be the case is that we need to incentivize a whole lot more talent to come into the sector so that we can essentially find better and more innovative ways, to solve some of the problems that currently bedevil the industry. And when you think about capital, being available in the sector, I think there are two broad issues that need to be addressed. First is when we proposition international development agencies, they're usually far more interested in funding smallholder farmers, which is great because it does help increase, their livelihood and by extension their income too. But it is the case that if we are serious about addressing, the volume and the production issues, we will need to switch away from that model because as it stands, it is not sustainable. Another issue with capital is the fact that we haven't had significant amount of private capital invested in the industry. I mean, historical figures would suggest that, that number is less than 5%. And that's largely due to the fact that we don't have enough data for investors to make a risk-adjusted, investment decision about the sector, which is some of the problems that we are also trying to solve, at AFEX Commodities Exchange. Lastly, I think the last issue that also needs to be addressed would also be storage. Right now, as it currently stands, Nigeria produces more than 30 million metric tons of grains every single year, but we only have about 1.6 million metric tons of storage capacity, and only even a small percentage of that is operational. If you look at the percentage range, we are at less than 5% in terms of our absorption capacity. That is our ability to store grains over the course of an entire year. If you compare that with South Africa, South Africa has more than 130% in terms of absorption capacity. China has more than 100%. So I think it is the case that some of the factors of production that we have mentioned may not necessarily affect the cost of production or the cost of nutritious foods as we would expect.
Right.
In terms of what the government and private sector need to do in order to address some of those issues, I think it's safe to say that we need a broad range of investments across the agricultural value chain, from production to aggregation to also fixing some of the infrastructure issues with regards to storage, and then also with regards to logistics. Policy is also another issue that would also need to be addressed in terms of also addressing the high cost of nutritious food in the country.
Yeah, and but how does AFEX, collaborate with other players across the value chain to sustain this, food systems and build even more a more resilient system?
Thank you very much, Ladi, for that question. As you well know, we at AFEX, we are obsessed with the vision of helping Africa feed itself.
Right.
And we have been working, with different players across the agricultural value chain. With regards to some of the work that we've done, with the government in recent years, we have collaborated with them on the Anchor Borrowers program, which does help to address the production side of the conversation. We are also in collaboration with the federal government, working with in the Strategic Grain Reserve, which is to address some of the price volatility that we tend to see with commodities over the course of an entire commodity trading season. With regards to private players, we do help private players with the financial arm of the company, help them raise capital, from the financial market so that they can essentially purchase commodities and essentially reduce their cost of production, which eventually feeds into, the final price that consumers pay, for the end product. With capital market operators and in concert with some of the other players within the agriculture landscape, we are providing access to markets. So for smallholder farmers that want to sell their commodities, we provide access to market for them. For retail and institutional investors who are just looking to partake in the agricultural sector, either on a momentary basis or on a long-term basis, we do provide veritable investment products for them to invest in. So those are largely some of the collaborations that we've had, both in the public space and then also in the private space. And as you're well aware, we will continue to collaborate with a whole lot more players within the agricultural value chain in the years to come.
All right, Michael, you guys are doing a whole lot there. Michael Martins, Portfolio Manager at AFEX, thank you so much, and enjoy the rest of your day.
You're always welcome, Laddie. You too.
You're still watching Business Morning. For an opening call to the market now, let's bring in Willie Bong. Hello, Will. What's happening?
Good morning, Laddie. What's happening in the market is the market activities in the equities markets reversed Monday's gain. We saw 1.26% gain on Monday. I was quite happy about that. And then now it's closing lower at 0.22%. Yesterday's trading was not very impressive. And investors sold off GTCO. Now that was down 3.9%. Now all share index now at the 42. It's still at the 42,000 level though, but it's at 42,317.52 points. And we're seeing that the market capitalization is still barely hanging to the 22 trillion naira mark there. We're just hoping that it doesn't fall back to the 21 trillion naira mark. But we're seeing that the month-to-date loss also has increased to 2.2%, while the year-to-date loss has moderated to 5.1%. I mean, the year-to-date gain has moderated to 5.1%. That from the 7-point-something% we saw last month, we were expecting it to go higher, but now it's decreasing. And the total volume of trades we saw, actually, the total volume of trades has decreased, was increased yesterday to 270.09 billion units, and the value was at 2.3 billion naira. That's a decrease from what we observed on Monday, and it was exchanging over 3,700 deals. Now, Access Bank was the most traded stock by volume and value at 50 million units and 497.74 billion naira each. On the sectors, we saw that the banking, industrial, oil and gas indexes were down yesterday. Just the consumer goods and insurance were up. We saw that O&O probably less, like corn oil, O&O led the losses in that sector, in that counter with the oil and gas counter there. The banking sector was 4 of the Fuga stocks down. The tier 1 banks, leading the losses in that counter, and we're hoping that doesn't continue today. We're hoping that the trading, gets boosted. Now we say, okay, we move over to the NASD market. We saw that the flattish trend, the trajectory is still going on there. There's negative performance there. There's no movement in that share price, in that index. 734.41 points. That's where we're at, and that's where the market is trading at. And we saw the market cap at 606.75 billion naira. No change, like I said earlier. As I said earlier, no change in that place. And we saw the volume of trade transactions yesterday was really low, 2,000 units of trades, as in, I don't know. No, what's really happening there? We're just going to have maybe someone talk about it some other time and tell us what's really going on in the unlisted market. The value was at 3,900 naira, and we just one deal that took place yesterday. And then we'll move over to the fixed income market, where volumes of trade was really low yesterday. We saw quiet trading as investors are positioning themselves for the NTB auction and the bond auction that is going to take place today. But to tell us more about that, let's talk to Choma Udu. She's a fixed income dealer at GT Bank. Good morning, Choma.
Good morning. Thank you for having me.
It's good to have you as always. Now, Choma, the NTB auction, the bond auction is expected to happen today, if it's not happening already. What are investors supposed to expect from these auctions today?
Well, it's going to be a very busy market for us today, the NTB auction and the bond auction. For the NTB auction, we have about 5.8 billion on offer across 3 tenors. 960 million at the 91 days, 182 days, 1.1 billion, and 362 days, 362 days, 3.8 billion. We expect moderation of rates, at the longest end of the short of the T-bills curve because of the amount on offer. And then for the trading in the secondary market, we expect a bullish bias as in anticipation of moderation of rates and then basically the size on offer. Going to the bond space, 100 billion is an offer across two maturities on the 2026 and the 2037, 50 billion apiece across the two maturities. We expect that the 2026 will, print at the same levels of 11.65%. And then we expect that the 2037 will close at 13 levels where it's trading, around that space today.
We're talking about the secondary markets, where we've seen a trend that the yields at the long end have been dropping. Do you think that pattern is going to continue? You're expecting it to remain, but what's the actual projections? What are the numbers saying?
Well, because we haven't seen a lot of volumes in that space, so we've seen a bullish bias. So we expect that the yield in the secondary market is going to continue to drop, moderate. It's currently trading at the range of 4.95% to 9.5 to 5%. And with the amount on offer on the auction today, which is about 5.8 billion on the NCB space, we expect that there's going to be moderation in yield and a bullish bias across the short end of the yield curve.
Thank you so much, Chama, for that expectation. We're looking forward to it, and we hope that it's going to be probably bullish for the investors. That's my outtake. So that's Chama Udu, fixed income dealer at GT Bank. So, Ladi, we're just going to hope that the market springs a positive surprise like we always, hope.
I'm waiting for my Santa rally. Let's see if
the Santa Claus rally, I'm waiting for that too.
All right. Thank you, Will. All right, after the break now, we head on to London. Do stay with us. This is Business Morning. Welcome back. We head on to London, and at last it seems diplomatic talks and calls have some benefits, with the UK scrapping its red list. Let's get Juliana now with the details. Great to have you, Juliana. So the aviation industry should, be heaving a sigh of relief now, with the scrapping of the red list. But what are the requirements now?
Yeah, good morning, Laddie. I suppose it's testing, 1, 2, 3. That's the call to action at the moment, as you said. From this morning, Wednesday, the 15th of December at 4 a.m., you can now, if you are part of the 11 countries that were on this quarantine list, you can come into the UK without having to spend £2,200 and stay in a mandatory hotel. It's all about PCR testing. So if you are a fully vaccinated passenger coming from Nigeria, you will have to take a pre-departure test, and when you arrive into the UK, you have to also have a pre-departure test that comes back negative on or before day 2 of your arrival. Once that is cleared, you're free to roam and do whatever you would be doing. If you are unvaccinated, you have to self-isolate for 2 days, but you still have to take the PCR test before you leave Nigeria. You'll have to take a PCR test on day 2 and then a further PCR test on day 8. However, there are measures in place. If you pay more money, more pounds sterling, you can leave self-isolation much earlier. But as you said, this is huge sigh of relief. I would say just for the aviation industry, but for the hundreds of thousands of families, loved ones that this had affected. Detty December, Detty as in D-E-T-T-Y. December continues. Diaspora can travel back to Nigeria, and of course, Nigerians can come into the UK. Great news.
Well, I'm wondering if we can still have a Detty December, but we'll see, though. But yesterday we're celebrating the drop in unemployment, but today it's inflation now hitting a 10-year high. Did this come as a surprise, seeing that, commodities like fuel recorded a hike?
Yeah, quite a surprise. According to the Office for National Statistics, CPI, so basically the cost of goods in your basket, has increased from 4.2% in October to 5.1% in November. As you said, this is a 10-year high. I think economists had forecast about a 4.7% increase. That 5% number had been floated about, but we wasn't expecting to see that until late spring. So it is pretty shocking. I think families in the UK are really under severe pressure. You know, they're not getting enough money, enough produce for their buck. Prices are rising instrumentally high, and it's not just one particular area like fuel, as you mentioned. You know, it's in retail, it's in clothes, it's in hospitality. It's practically everywhere, and this obviously comes a day before the Bank of England Monetary Policy Committee gather tomorrow in Threadneedle Street to discuss interest rates. It's currently at a historic low of 0.1%. Lots of bets had been placed before the discovery of Omicron that potentially there could be a rise to 0.25%. But now that we're under intensive pressure and there could potentially be a lockdown in January, the Bank of England Governor Andrew Bailey doesn't want to curb this kind of fragile economic recovery. So it's all to play for. We're not expecting any changes, but clearly inflation is really worrying, and 5.1% could get to 7 to 8% by spring.
I guess it's not looking transitory anymore. All right, Juliana, thank you so much. Enjoy the rest of your day. Always great to talk to you.
Thanks, Laddie.
All right, let's take a look into the crypto market now. We see Bitcoin remaining stable above the 46,000 range. That's one major support there. Bitcoin could still start a steady increase if there's a clear move above the 100-hourly moving average. Let's take a look at the market cap. We see it's $2.1 trillion. It's up 3.75%. Volume traded in the total crypto market, we see it's up about 3.24%. Bitcoin dominance, 41.54%. It's up 0.19%. Let's look at the price of Bitcoin. It's at 8 a.m. this morning. See, it's at $48,141, up 3%. That's having that nice rebound there. Volume traded, $31.89 billion. But we see Ethereum still below the 4,000 mark at 3,858. But it's up 4% this morning, hoping this is not a dead cat bounce. Traders are still trying to find the bottom right now in this market. Let's look at top alts by market cap now. See BNB, $529. It's up 1.48%. See Cardano. So it's mostly green there. Those top alts there. Let's bring in Solomon Amunde now, digital market analyst. Great to have you, Solomon.
Good morning, Laddie. Good morning.
Good morning, Solomon. So traders right now are trying to know where the bottom is for Bitcoin, because, you know, Bitcoin dictates this market. So have we seen the bottom yet?
Yeah, on the daily chart, we have definitely seen the bottom, and the bottom is actually $47,000. So we are still on an uptrend, and Bitcoin, we're still expecting Bitcoin to go over $51,000 to resume our bullish run. So the market structure for an uptrend is still very much intact, as long as we don't close below 45,000 on the daily chart.
All right, then we see Ethereum is below $4,000 right now. How's that looking?
Yeah, Ethereum basically it's just correcting for the very first time, and it has really performed very well in with respect to market dominance. We can see it's been ranging between about 17% to 19%, which is not something we see often happen with Ethereum. So far so good. Ethereum has been very, very strong, and we need to stay strong so that the alts can actually resume their own bullish run.
All right, so what alts are you looking at the moment?
So right now, I'm majorly looking at Metaverse projects. I've been looking at Mana and Stand to correct, but they haven't really corrected. They haven't really corrected so far. But Chromia has done so much correction, almost 60 to 70%, from about $1.4 to about 60 cents, which is a very, very good buy. And Agri Infinity too did correct this morning to about $92 from over $140, which is also a fantastic opportunity to hit in for those that are interested in game tokens. We have a host of others too. I can't really list all of them right now.
All right. I guess it's scampering for the dips right now. All right, Solomon, always good to talk to you. Thank you.
All right.
All right, let's look at top 5 gainers there. We see AVEX there leading that counter. AVEX is $90.82. It's up about 17.41%. And Elrond also on the top gainers list this morning. We see double-digit gains this morning. And Pancake Swap, you see cake there. It's back above the $10 mark at $12, is up 15%. And Doge back in the top gainers list there, up 14%, thanks to Elon Musk again. Elon Musk saying that Tesla would accept Doge for payments at some point. Well, we see he's still a fan of Doge, and Doge is back up there, so maybe we might have a meme coin season, if possible. And we see Matic there, $2 on the mark there. Top losers here at Ravane, it's down 10%. Leo down 6%. Rose again on the losers counter at down 3.40%. And you see a couple of stable coins there, down fraction is there with 99 cents each. Still looking okay right now. Still looking like a stable market. Anyway, that's it on the show today. Thank you so much for watching. Remember to join us at 1:30 for Business Incorporated for more updates in the world of business. Thank you for watching. I'm Ladi Williams. Bye for now.